Good afternoon. I wanted to start today by looking at the U-turns that we had called out in yesterday's wrap-up. This is gold, where we made this high yesterday of 2078.80. And basically, this was yesterday afternoon with gold meandering around here, but it was very clear on the 15-minute structure that we had a down, an up, because this is higher high, higher low, higher high, higher low outside. This is a down bar, down bar, down bar, down bar. So this here could have been a trigger bar for a long side trade, but also, given how stretched gold was on the daily, our bias has switched to a down day. And this point down here, 2027.10, provided no heat and about 16 points. This is one of those things you could just set up overnight. I set it up with a 10-point target, 10-point stop, got my target. Then if you were awake in the morning when this happened, it set up another trade that allowed you to do a little more control, risk control. And basically from this low here, after the U-turn, we had a very clean ABC up, which makes your risk bar this right here, and it's only $4.70, call it $5. So 2024 went all the way down to 1980. So that's about $45 on $5, 9 times your risk down in this move. And then if you paid attention again, and you don't want to keep taking these indefinitely, at some point a trend does exhaust itself. So after that first one that worked extremely well, I would be looking more for a scalp of sorts, maybe 1R, 2R. But, we had a situation set up again here where we had A, B, C, and to put a cherry on top, this was a hoagie right here. And you're able to play that to the downside. So that was the first thing I wanted to point out. Oh, and let's see, that was there. Yep. Now we talked about a U-turn in crude, and we drew the same structure from yesterday's high. So from yesterday's high, we had an A down, a B up, and a C down. So I think my comment was this 119.64 or 62, whatever that was, when that breaks, we should get some movement to the downside without heat. Well, this provided a little more heat. If you're talking about 119.62, 120, so about $2 stop would have held. And then on the initial move, 115.50, you got about $4. And then I haven't looked at this, but it looks very similar to gold, where we had up candle, down, which is inside, up. Okay, this had an extra wiggle in it, but it looks like we have that didn't go higher than the other one. Okay, so this counts in the same wave up here. And then you had an inside bar that broke. And you got some follow through to the downside, and this, of course, was, nobody knows why, but it was a very big bar from 115 down to 103.63. But had you been in on the right side of that, you had some odds that you could have caught some of that. The other trades that popped up today, now going back to our bread and butter, the forex trade. This is a chart of the euro, and actually before I put that on there, let's look at the daily. So yesterday we did get above today's high. Now when you have a cascade of reds like that, you don't necessarily want to buy the first move above, and that's because there's so much downside momentum. The primary filter for our forex trade is that there's a good daily setup. So after this day, we now have a green candle to buy above, and that could set up a forex trade. So here, these are some of the finer nuances that over time, as we see them in action, you'll get, I'll explain them here. But so if we were to put in that day's high, we took out yesterday's high at 3:30, had a one-legged pullback and went all the way to 4:30. Now from 4:30, one leg down to here, one leg up to here. Now this is an outside bar, so it's going to take the same down, 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 and then here's your cherry again. Nice little hoagie. And this hoagie was 1, 2, 3, 4 bars inside of this bar. So if we use this as our risk bar, 62, call it, minus 43, it's a 19-cent risk bar. We probably got at least 5 times that, but go see what we got here. Yeah, about $1, 1.3 on 19-cent risk, so well over 6 R returns on this trade. Here, just for visuals, I'll draw the rectangle. This is your risk bar, and if you were able to catch that hoagie and use a tighter risk, everything doubles pretty much. But I'm just going with standardly how I would program a computer to do it. And you can see the amount of reward relative to the risk. So one other setup that I was looking at today is the indices. And again, like I'm probably going to do today, I left before the close, so I don't know how everything's going to settle out. But when I saw it later, and I saw that the NASDAQ had a red candle, and so did the S&P, I shifted my focus to the Russell because it closed with a green candle. So upon that break, we could actually have a decent setup, decent forex setup. So what happened here is we got above that initially at 842. So since we're already in the opening period of time, I used a 1-minute chart. If this had happened in Asia or Europe, I'd be looking at 30-minute or 15-minute or something. But just given how it happened right after the open and the market was very active, I took this down to a 1-minute chart, and you can see after that first pierce, and if you remember, I used a 2-minute chart on IWM a few days ago, and again for the same reason. We were right in early in the session and there was plenty of activity. So these 2 bars fall within this, so it's a hoagie. That falls within, this is an outside. Let me point this out. You actually got a 1-tick violation here, 99.20 versus 99.10. So if you'd used this as your risk bar, you would have entered here and then stopped out here. And then this became your risk bar, and you had to just get back on that horse. So, it's okay to lose 1 R once in a while. That's the beauty of asymmetry. When you lose, it's 1 R. When you make, it's 4, 6. We saw 20 yesterday on gold. So on the re-entry, and this is your bar here, let's put a rectangle around it. But this bar is for 3.7 in size. Not a particularly huge bar. And just to compress it, we can look at a 5-minute chart. But our risk bar was based on a 1-minute chart down there. And as you can see, we're still hitting new highs. In fact, I wonder if this would set up a cup and handle type pattern here. I'll start looking at the ATR and the volume, but even just to there, this has been 22.95, 27 on 4, 6, 7 times your risk. Tomorrow I'll be watching out for the NASDAQ and the S&P if they have green candles today, because then we have a situation similar to what we saw in the euro. In fact, we did sort of have it already. They can still work. I just wouldn't call them choice, but here, when the S&P broke above here, we had this noise, which is really kind of an expanding pattern of noise. See if I can get, there we go. Right here, this little expanding, but once we peaked here at 1135, we had a clear 1, 2, 3. This low is 625, 650. So this was your risk bar right here. And who knows, maybe we get a huge rally into the close, and this risk bar pays off multiples. It was already paid off twice, just from eyeballing it, but there could be more to come. I think I'd calculated 4308 or 4311 would be 4 times. But it does look like we're on our way for that. So I feel like I'm forgetting something. Oh yeah, the cup and handle here. This is some live analysis that I would do anyway if I hung up, so I may as well show you how this is done in real time. I need to just keep a couple of screens pre-set up, so I don't have to do this on the fly. But here we use a simple 30 to judge volume, and we are getting some low volume there. And then our ATR 3x20, we want that under 0.7, and speak of the devil, 0.702. This was 0.689 at this point, so we are getting things in that range where we could pay attention to them. And this is kind of minor too. It's not 12 o'clock. It's 2 hours long. It's not as big as the one we saw in gold yesterday that was, 12 or 15 hours. So yeah, I'm not so excited about this, other than the continuation of this morning's trade on the 1 minute where we would have gotten in around here, 90, I think 95 was the stop, so probably got in about just under 2,000. And this is still in play. That's all I had for today. Let me see. Yeah, that's all I had for today. So anyway, if you have any questions, do leave a comment, and I will do my best to answer them. And good luck with the rest of the day.